Hey traders, this is Cousin Vinny coming to you from theclosingprint.com on Sunday, December the 8th with a look at the week ahead and a small watch list. The watch list, if you want to skip ahead to that, typically is around the midway point in the video. This is a chart of the S&P 500 large cap index with a trend that is from the 2009 low in March to the current highs are 57 months and counting for this current secular bull market, driven of course by QE and infinity. And many people are talking about tapering and whether we are near the end or not. Now, looking at these Fibonacci levels, I'm just drawing some levels here. I'm thinking that after testing this 10 EMA this week, that we are going to continue to move higher. So these Fibonacci's will move higher along with price. Obviously, that's no guarantee, but that's what I'm looking for. So I just have these on here for my reference points. Okay. Note on the weekly that we have a very large Kirby bar down here around 1450, and that's right around the 50% retracement level if that should occur. Now this is a chart of Christmas December market returns going back to 1990, and we can see that we had a small 2% pullback here. We had a fairly large 6% pullback here, and a couple of small ones around the 2007-2008 downturn in the market. But for the most part, generally speaking, December is a good return, the green being the Dow Jones and the SPX being the red. Currently, futures are up $2.15 at 1807.15 on the S&P. The NASDAQ futures are up $7.60. Looking pretty good here. The Nikkei, I just saw a alert that went across that said something about the Japan's Q3 GDP revised down to 0.3% from 0.5%. So I'd be watching the Nikkei tomorrow and the end of this week. This is a chart of the Dow Industrials over from the period of 1900 to present. I pulled this up just to show the area of the Vietnam War, the aftermath going into the Carter years, and then the years when Reagan stepped in. We had the nice 56 or so month rally. We had the 87 crash, and then we had a nice rally here in the Clinton and Bush years, the father, up to these highs in 2000-2001. And this is the war on terror here. And of course, we broke above these levels and continuing higher on the Dow as well as the rest of the indices. The point being is that we have this period here where we have anywhere from a 56 to a 64 month uptrend, and then a correction of at least 28%. So we are 57 months at present, and I'd be looking for something in 2014 if price action dictates that we are going to see a move lower. Looking at some of the sectors that have been doing well, the top 10 here look pretty good: broadcast, radio and TV, retail, mail order, as you would expect, Amazon, medical, drugs, computer services, top 100 sector stocks, medical, biomedical, pollution controls, transportation, trucks. You can look at Navistar. They're a good stock to trade. Cummins International, medical products, IT services, and communications infrastructure. This is a chart of the Dow Industrials, which we can see came down to this upper trend line right here, and we had a nice bounce. We had a bounce in the RSI, and we could see better volume here, but presently I don't see anything unusual here. But this is looking pretty good. We had 5 down days and a nice bounce on this upper trend line. Looking at MACD, it looks like it could turn north. Looks like it's what it wants to do. We have an oversold slow stochastics, and the bullish percent B has bottomed and turning higher. I'd look for an area up in here to find another area to be looking for weakness of the market. This is a chart of the S&P 500 daily, and as we continue to move higher, I'm reluctant to call a top. I know a lot of people are doing just that on Twitter and media sound bites on Bloomberg and CNBC, but I need to see the proof in price action first. Some of the things I've noticed is that we bounced at 2 different pattern trend lines here. This longer term channel that we've been in, where we broke above, and then we've started this ascending wedge pattern, which we bounced off of here at 1779.09. We saw some decent selling volume for 5 days going into this upper trend line, and now we are bouncing with bullish percent turning back up, and we can see NYSE is still headed down, could turn back up. We had a nice turn in the NYMO. We didn't really get that weak. MACD looks like it's turning as well. ADX, no signal here. And the number of stocks trading above their 50-period moving average were at 74. VIX did give us a quick turn down from 15, so that's a short-term buy signal. Also, keep an eye on your Kirby levels if we do manage to come up to this upper trend line and fail going into year end. At this point, I'm looking for a Christmas rally that takes us into January before a resumption in any move lower. That's not a guarantee, that's just what I'm thinking at present. This is a chart of the S&P 500, S&P Composite 1500 Index, showing the similar patterns, the bounce area here, and also confirming with advanced decline, breadth is moving higher as well. So I'd like to see this continue to move higher this week to confirm a move higher on the 1500 as well as the S&P 500. This is a chart of the NASDAQ Composite. We can see that we've already tested our recent highs and closed right near that level on Friday. Note the ascending wedge held and prices bounced off this lower trend line. So this area looks good, this area looks good. All of these areas were bounces. So this trend line in this wedge is continuing to hold. So the comp has shown much more strength relative to the S&P 500. I am looking for the S&P to continue to move higher though. Looking at our indicators, we can see NAMO got down to this level and bounced. Bullish percent is down at 68.13, so this has a lot of room to move higher and prices to move with it. Note NASI and MACD both look like they want to turn up. The number of stocks trading above their 50 moving average is 59.19, so that has room for improvement, and ADX looks like it's going to move up higher as well. So that's the NASDAQ Composite. The gold monthly chart could easily see more downside if we lose these lows here. Okay. Note Bollinger Bands are continuing to expand. Also note RSI is continuing to move lower here. We could see a bounce around this level. That's what I'd be looking for if you're interested in trading that. Note that these lows from 2000, 2001, where we really had this nice gangbuster rally on gold, from these levels down to 253 up to the recent highs, we're right at or just above the 50% retracement level. So we could look to see that happen. Note where MACD is, looking pretty weak, and I'd be looking for slow stow to get down in this area here before I took it along. Also note where bullish percent B is. This could move back down as well. I'd be looking for that along with MACD to turn and give us a signal, a crossover signal, before I'd be interested in gold. This is a chart of the carry trade and the S&P 500. The dark line is the DBV carry trade, the Deutsche Bank Currency Harvest Fund. As this continues to move sideways, it really isn't giving much of a signal. Usually when DBV drops, that's when you see a market correction. When DBV, the current carry trade, rallies, we see a commensurate rally in the S&P 500. So with it moving sideways, there's really no signal here. If this for some reason drops unexpectedly for some reason due to the yen weakness, currently the dollar yen cross is continuing to move higher. I would expect that to continue into year end at present. And here's your chart of the Nikkei. We're seeing a bounce here right at the 20 period moving average. I'm expecting this to continue to move higher, mainly because of some things I posted on the older population in Japan. There is a new law that's going into effect, if it passes, that would release, I think it is $8.5 trillion in savings that could be tapped as the yen bears are returning to the currency, looking for lower prices. And what this will do, if that $8.5 trillion worth of household savings succeed in depreciating the currency further, okay? There'll be a lot of spending. Currently, the idea is that this money can be used by the elderly to transfer the money tax-free to their younger family members, and therefore be able to spend the money, go to college, and so forth. There's a lot of rules, but you might want to check into it. There's two articles, one in the Chicago Tribune. This is the link right here, as well as Bloomberg, who also pointed out the same thing. So if we see a deflation in the yen currency, we can expect the US dollar Japanese cross to continue to move higher, as I had mentioned previously. There are more implications I'll go into in further depth in a future video. For the time being, though, I'm looking for a weaker yen and for the Nikkei to continue moving higher. There's some stocks that just jump off the top of my head, Toyota and Sony as ones to take a look at and maybe trade on a good setup. Okay, so let's take a look at some of the sectors. Note the banking index as well as the XLF, the regionals. I'm looking for this bounce off the 20 period DMA to hold, so I'd be looking at the banking sector, regional banks. XBI, we have a nice flag here with a nice candle on Friday. Builders, nice bounce off the 50 period. IYR off the lows. Note the transports had a nice bounce. Perhaps you want to look at the airlines, which have been doing well. XLB, nice bounce. The semis had quite a nice pop. Note MU has been doing quite well. XLI has been one of the stronger sectors, a nice bounce and moving higher. XLF, nice bounce. I know this is getting redundant, but this is what you want to be looking for. XLY, cyclical is looking good. XLV, healthcare. I know Mikey has a bunch of names in both of these sectors, the XLV and XLF. We might take a look at those and note where XLU, after some weakness over the last couple of months, has turned north and held right at the 20 period MA. So keep an eye on that as well. This is a candle glance of the XLF, the financials. Note AXP. Bank of New York. Capital One. Nice, trying to break out here. CBG, CB Richard Ellis. I pointed this out last week when it was starting to move above, a week before last actually, when it was starting to move above the 20 and the 50, that we had a nice possibility here. We had this break of trend, and then we flagged here last week, and Wednesday broke out and continued to move higher. CB Richard Ellis is was one of my favorites for the past 2 weeks, so you can see why. Charles Schwab, nice flag right into the 20 period. E-Trade, nice there. So you might want to check with Schwab and E-Trade doing well. You might want to take a look at Ameritrade and some of the other brokers. Co-America, nice flag into the 20 period. Really just a nice pullback, and then it's moving higher. Fifth Third Bank Corp. All of these look really nice. GS had a nice little flag down into the 20 period and a nice hammer on Friday, so I'd be looking for these highs near 170 to be taken out. Hartford Financial, nice bounce there. Huntington Bank Corp, it's really a regional. ICE, back to highs. That looks really good after a flag down to the 20 period and a bounce. JP Morgan, Key Corp, got these highs. This is probably going to break higher. Really an ascending triangle. Kimco, Realty's looking decent. Macerich, I pointed this one out on Monday, that there's a possibility that we could move higher. We had an outside day, and then we had 3 white soldiers following that. So we had a nice breakout on Macerich. They do outlets and shopping centers. McGraw-Hill, MetLife, all of these nice pullbacks to the 20 period. That's why I'm expecting the XLF to do well going into year-end. Indac, PNC, nice little bounce right in this area. And Plum Creek, moving back above the 20 period. I expect to see the 20 period cross the 50 shortly. US Bank Corp, had a nice pullback to the 20 and breaking out now. Torchmark, Prudential, and Simon Property Group, nice little breakout here. I'd expect to see something similar to Macerich and continue to move higher here into year end. So that's one of my favorites for the week ahead if we see a follow through. Okay. State Street looks nice. We didn't get quite down to the 50 period moving average, but right at the 20. Look for this to continue to move higher as well. This is a candle glance of the XLV sector. Note some of these breakout levels. Looking good. Got a nice pullback on Allergan and a pop on Friday. Agilent, AmerisourceBergen, nice pullback to the 20. Similar to what we saw on the financials. Bristol Myers Squibb pulled down to the 50 period and a nice bounce. I gotta believe this is going to continue to move higher going into year end. X-ray, Dentsply, this is a nice stock to trade. Celgene had a nice pullback, didn't get back down to the 20 before the 20 and the 50 crossed back up. We had a nice breakout there. Cerner Corp, nice pullback to the 50 period. I would expect that this is going to continue to move higher into year end and break out here. Gilead, I saw PVB Trader was trading this last week. Nice flag on Forest Labs. That's very bullish. Note the volume. Express Scripts, nice pattern here, back to the 20 and moving higher. Humana, nice pattern. Eli Lilly, looks like this could continue to move higher as well during the week. Maybe it's a scalp, maybe it's a swing, we'll see. Page 2 of this candle glance of the healthcare sector. Note Mylan Labs, we pointed that out last week, that was flagging out. I was hoping that the flag would break out here, but it didn't. It pulled back to the 20 instead and bounced, so that looks nice. Most of these did the same thing. Merck, Medtronic, Perrigo, very nice pattern. Pfizer, looking decent. St. Jude's, this looks very, very nice. We're already broken above these levels here. This should be horizontal. But nice candle on Friday. Look for a continuation on a breakout on volume on Monday. And Stryker Corp, a nice pullback between the 20 and the 50. Back above the 20. There's no reason why this shouldn't continue to move higher like the rest of the group. United Health, very pretty pattern here. We've got these highs to take out. But we have a pullback to the 20, nice consolidation. Thermo Fisher, beautiful chart. Pullback to the 20 period. Looks like it's going to pop and take out these recent highs. So that's what I'd be looking for on XLF and XLV. Look at Varian. Varian's got a really nice flag here. That should break higher if the sector breaks higher as well going into year end. This is the defense sector in military terms. Alliant, nice pullback. Boeing, holding those lows back above the 20 period. Lockheed Martin, looks like it wants to turn. L3 Communications held the 20, nice and strong. Exelis, looks good. Raytheon holding the 20. And Northrop Grumman holding the 20 as well. This should move higher going into year end, given we don't have any bad caveats to surprise us. Alright, so that's going to do it for me for the weekend. It's already 10 minutes to 8. We've got the futures up $1.65 now, moving off a little bit. NASDAQ up $6.90. The dollar is moving up a little bit. Nikkei's pulling back just a hair on that news. So I'd be keeping an eye on these going into year end for trades. And the Santa Claus Ho-Ho Rally. Okay, so take care. Remember to come and check us out at Day Trader Bootcamp. You can get a 2-week trial for $19.95, I believe. Goat has. This is Cousin Vinny from the Closing Printer course. And if we shoot over to Day Trader Bootcamp, we can see what that price is. $19.99. Okay, so come check us out. Great group of traders in the room, a lot of professional traders, and a lot of good insight on a daily basis. Take care. I hope this helped.